City Church, ladies and gentlemen, welcome into the room. We are excited for another midweek connect. As you guys know, we are in this financial fast, 21 days of prayer, fasting, and financial restraint. And I pray that you are being blessed. Do me a favor, before you go any further, be a good Southerner. Go into the comments, greet somebody, let them know how glad you are to see them. We survived another beautiful day, another day at work, another day with kids. So go and love on somebody. Let them know that you are here. Share this. Get this to someone who is going to need this conversation. We are impacting our lives in every area. And tonight's conversation is going to be focused on winning in the insurance industry. And I know we have family, we have friends, we got cousins who are going to need this conversation. So share this across your social media. Share this in your little DMs or in your text boxes, your message threads, whatever the case might be. Get it to as many people as possible. We are excited about what we're going to be doing tonight. Speaking of a little housekeeping, our 21 days of prayer. This is the last week. It is our finale, but we're still finishing strong. We have a few more days left of one sacrifice, and that sacrifice being one of your choosing. Whatever that is, you give it to God, you commit to it, and trust Him with the results. In addition, we are reading our book collectively, Simple Money, Rich Life by Bob Lodich. I pray that that book has been blessing you. I have been hearing so many testimonies of how it's been so practical and it's on your level and you are learning so much, and the support that this resource can offer you for the rest of your days. We are meeting every Saturday at 9 a.m. for 1 hour of prayer. That's what we call altered, as our lives are altered at the altar. We are changed at the altar. And God has undoubtedly been meeting us in an incredible way on our Saturday mornings for altar at 9 a.m. And we invite you to meet us on this Saturday just the same. Maybe last but not least, we have our city market. We had this city market on this past weekend. It was pretty amazing. And it was collective PT. We ought to run it back. So we are running City Market back one more weekend. You can find us on this Saturday at 8 a.m. to noon in the parking lot of the City Church of Goldsboro. If you have not registered, if you were not a part, there is still space for you to join in. If you were already a part of last weekend, you are grandfathered in. We're going to take it to another level this weekend. I hope you can make it. If you can't make it as a vendor, at least come and make it as a shopper. Come support your brothers and your sisters. We are going to have an incredible time. And just so happen, if you're watching and you don't know much about our ministry, but I have heard some things, I want to come and check you guys out. You have an incredible opportunity to do that on Sunday, September 8th. It is Welcome Home Sunday. That weekend is going to be catered specifically for you. You have two opportunities to worship with us. That's 9 a.m. and 11 a.m. Welcome Home Sunday. We would love to have you. This month, ladies and gentlemen, everything has been focused on finance, on budgeting, on what does the Bible say about money management, stewardship. We've had conversation on real estate. We've had conversation on banking. We have a conversation to come on the stock market, as one of our responsibilities is not just to save our money, but to multiply our money. And tonight, we're going to be having a conversation on winning with the insurance industry. Preaching is what I do. The Bible is what I do. And when there's something I am not like a master at, then I'll call on people who kind of specialize in this industry and specialize in this field. And we have two beautiful young ladies who are going to be joining me tonight in this conversation. And this is what they do. Do me a favor, go in the chat right now, clap your hands and make some noise as we welcome tonight Miss Carlotta and Miss Kenya to the room. They are your insurance specialists for tonight. We're going to be engaging in some phenomenal conversation, and I'm excited about what we're going to be sharing on tonight. Ladies, I'll let you kind of take off. Let's start first by sharing who you are. Share your name, your business, maybe what it is that you specialize in. Let's start from there.
Good afternoon, evening, everyone. My name is Carlotta McCleskey. I am an insurance agent. I specialize in life insurance, final expense. I also assist my clients with their final wishes. I am a health insurance agent as well, and I assist with Medicare as well. So if anyone has any questions, throw them at me tonight.
All right, Miss Carlotta, we're going a little off script right here. You just kind of threw me for a loop. McCluskey?
Yeah, I got married.
I
did. I haven't
changed.
shared it with the public yet, but I got married June the 15th of this year. Yeah.
Congratulations.
Thank
The
you.
last time we saw you, it was not McCluskey.
I know. I worked so hard under Winston, but it's McCluskey, so I got to put in some work.
Congratulations, and we
Thank
celebrate you on that. Miss Kenya.
you.
Hello, my name is Kenya Holly. I'm too a life insurance agent, and I also specialize in final expense policies. However, I also do property and casualty. So if you have questions about auto policies, property and casualty, I can assist you.
Ladies, if you don't mind, I want you to take an opportunity and share a little bit about your background in the industry. How long have you been in the industry? And maybe, what kind of prompted you to go into this field to help and to serve people in your community?
So I'm going to try not to give the long version, but when the world shut down and we had a pandemic, I was working at a local hospital in Robertson County that is about an hour and a half south of Goldsboro. And for my entire life, I've always wanted to be a nurse. I've always wanted to work in healthcare. And the department I worked in, we did more community outreach. And the world shut down, so I couldn't go in the community.
Mm-hmm.
And I had a friend from college that said, hey, it's going to be all right. I want you to join this Zoom. And the Zoom was about final expense. And I took my insurance test. I took it 3 times. I was so nervous the first 2 times. On the 3rd time, I finally passed in June of 2020. And the Lord just has a way of working things out. I did not see this for myself at all. However, when I worked at the hospital, we would do free services to include blood pressure and blood sugar screenings. And most of our populations we served were either the homeless or just persons like the average American who's trying to make it, and maybe they don't have enough health insurance. So I saw that there was a need for health insurance and definitely life insurance. It's foreign to a lot of communities. But I've been in insurance for about 4 years now. I've enjoyed it. I've got to meet some great people, and education is what I love. So I look forward to answering some questions tonight. So if anyone has any, please share them.
Excellent. Thank you for sharing that. Miss Kenya, we welcome you.
So I'll be honest with you. I'll be really transparent. My daughter was 3 years old. She's 29 now. So I was a single parent, and at that time I looked at what industry is probably never going to go away. And I knew that you was always going to have to pay insurance. So I ended up going into that field in 1997. I started off in auto. I ended up being insurance underwriter, which nobody loves. I then went to my church at the time, actually purchased an agency, and they asked me to come help them open it up. So I did that for a little while. And then I started doing life insurance. So I'm from Florida. I don't know how you guys do it here, but when I started in my 20s, they had what's called a policy man. And so it was usually a white man that went around to the Black community collecting money, and he collected cash. And so when I started with this company, I was interested, so I had to shadow him. And then when I realized that our people were paying these large premiums for these small policies, I was floored. I was insulted. And so from that point, I was just like, no, there has to be something better for our people, because I felt like we were getting, robbed. And so I decided that I wanted to do that, but I wanted to present something better. And so I got with a company that will offer not just term insurance, because that's all they tell us about, which we get no return on that money. And I decided that I wanted to do this because I wanted to help our people, in a sense, have whole life access to whole life policies, things that they could put money into. And then I went with this particular company because we write all terminal illnesses. So it doesn't matter if you have AIDS, cancer, lupus, there is coverage we can get for you. So I started from a place of just seeing my people. Honestly, I felt like we were being robbed.
So I'm so thankful that you shared that and that you covered that, because in preparation for our conversation, I came across a lot of that literature on the history of the insurance industry, and it being one of the many stumbling blocks that our community has to overcome. Historically, we have been faced with so many things, the bottom end of the total pole. And it's almost like when we have crossed paths the wrong way one time, it's like I'm slow to deal with you again. And that's the history of the African American community when it comes to the insurance industry. In addition to mistrust, I'm just curious, what are some of the other primary stumbling blocks that you have kind of come across for both of you when it comes to our people and our disconnect from maximizing with the insurance industry?
That's a very well-rounded question. There's a few things, but I would say the top two is the lack of education and definitely the mistrust. Those are two things that I have to educate around. The lack of education, our people suffer for lack of knowledge, and that is very
Absolutely.
true. So true. And the trust does go a long way. The lack of knowledge can go into different umbrellas. The lack of stewardship, and that's very important. Just learning overall how to save your money, how to invest your money. Those are two things I will say that the African American and persons of color may not have access to. I think we're doing a great job in our era now at teaching and doing better. And I'm thankful. And then the lack of trust is almost like it's embedded in us. We don't want to give our money to someone we don't know, and then we don't know where our money's going to go. And if we can't tangibly see our money right now, it's almost like it just doesn't make sense. And investing is something that I think our community is not really understanding right now, but it's definitely an important tool to succeeding in generational wealth. And generational wealth isn't just about money. Generational wealth is a mindset, and you have to teach that so that it can last, So Absolutely. There are a few things, but I would definitely agree with you. The lack of education and knowledge and trust, those are two heavy hitters.
Thank you. Thank you for sharing that. Excellent feedback. Ms. Kenya?
So I would say outside of trust, I would say money. People just can't afford to sometimes get the policies that they want, is what I deal with the most. And the other thing I would say would be pre-existing conditions, because most companies are not going to give you like there are certain companies that their underwriting guidelines, they don't even look at you like you're not even an option. So when you have pre-existing conditions, you're already limited to what companies that will even consider or write for you.
I know we want to say the lack of money, but I disagree. I do understand that there are people who make a certain amount of money and the salary is there, but there is not a policy that you can't afford. It's just a matter of reprogramming your thinking. If we can buy $200 shoes, and that's no shade to anyone that loves to buy shoes or have a shoe fetish.
Absolutely.
Okay? None of that. But if we can do that, we can also invest that money into an insurance policy for your family. I oftentimes will tell my client, okay, well, you're getting income back, your income taxes back at the beginning of the year. You've survived throughout the year, without that refund money. What would happen if you take that refund money that you really didn't even have to begin with and place it into a life insurance policy? That $1,000, $2,000, $3,000, $4,000, $5,000 that you may get back in a refund, you can easily get that into a very large lump sum of a return of premium term or a, whole life and pay it off for the year. And that way it's not anything coming out of your pocket throughout the year for that insurance policy. So I try not to say to my clients, well, you just can't afford it. Find a policy that works for you, a plan that works for you and your family, but be mindful with your spending. It's important.
Yeah. So if you were, for both of you, if you're sitting down with a potential client and you're having an initial conversation, in many cases for someone who is not as familiar with the insurance industry, where are you starting? Like, what is the baseline? Let's minimally start here to make sure we maximize this opportunity, et cetera, et cetera. Kind of what is your baseline approach, your baseline recommendation for ensuring, a reasonable quality of life when life finds us, et cetera?
It depends on the client and their circumstance, but like she mentioned, there are some clients who have just pre-existing conditions. So you don't want to give them a high number and that premium amount scare them away, But if you do have an overall healthy person, similar to that credit score, any company will approve you for that life insurance plan. So it's important to know your client. It's important to understand their situation before you go in and quote or give them advice in general. Ideally, I do educate my clients and say, hey, how many family members do you have? Is it you, your spouse? How many children do you have in your household? Who's the breadwinner? And if the breadwinner is the husband or the wife or both of them, then I encourage them to look at their annual salary individually and collectively, because that's important. However much you're bringing into the household, ideally is how much you will need in coverage in the perfect world, so that at least the first year after someone has passed away, they can survive on bills. I lost my mom in 2020, and even though I wasn't living in her household, there were some things that my brothers and I had to take care of. And had it not been for her life insurance policy, it would have been a lot out of my own pocket, but I do encourage my clients to look at that, at least the first year in your salary, if possible. If not possible, then at least start with the base amount. Most funeral homes will say that they can do a really nice funeral service, traditional service. That's where you're getting buried into the ground for $10,000. Some will say $6,000. It just depends on what you want and the type of service it is that you require. So $10,000 is my minimum for both, if that's a person with a chronic condition or overall healthy. Let's start there and let's build on your budget. What fits your family income best? Because what we don't want to do is create a burden in the plan and you can't afford it.
Excellent. So true. Thank you for sharing that. And we're going to come back to something you just said.
Okay.
What I traditionally do is, because I know the average person doesn't understand, I usually just break it down to them as simple as I can. So I tell them, look, you have 3 types of policies: a term, a whole life, and kind of new what's called return of premium. And so I ask them, what do you want insurance for? And so I usually, if I'm dealing with a young person with young kids, sometimes, and some people disagree, it just depends, I encourage them to get term life policies. And my reason why is, when I was in my 20s, of course, I was a teenage mom. And so to get 250, I think I had $275,000 worth of coverage was very cheap, because I was young and she was a child. She couldn't ride on that policy. And so what I was calculating at that time is, if by chance I died in my 20s while she was still in school and someone had to take care of her, I had to add up, okay, what would it cost to send her to a decent college, and for that person who I was leaving her with to at least she not be a burden for up at least until she was 21. So I'll tell young people sometimes that if you're young with young kids, you can get a term policy, get more insurance. That way, if something happened, you got it. Whole life, of course, it gives you the option of, you can put money into it. You can use it as a savings account. It costs a little bit more. And again, it depends on how much you want to do, because if you're doing it to protect a mortgage, then that goes into mortgage protection. And then I offer them, which I prefer, what they have now. They haven't always had that, which is called return of premium. And basically, it works like a really good savings account, because like if you did a 20-year return of premium term policy, and at the end of that 20 years, if you outlived it, you get all of your money back. So it's a life insurance policy and a savings, and it's not that expensive because all they're doing is investing your money. But return of premium to me is the best of both options, especially for young people, because like I said, if you outlive that term, then you get that money back, and then now you can turn around and put it into a whole life policy and use it as an investment as well.
I love it. Thank you both for sharing that. Now, what I really appreciate is both of you just took this conversation away from final expenses exclusively to quality of life for those who remain. In many cases, we're just looking for enough to make sure Uncle Leroy gets buried. But what about the lifestyle that we hope can be maintained after the fact? Miss Carlotta, actually, both of you just kind of mentioned that in your own way. I would love if you took a minute to talk about the benefit that could come by way of an insurance policy, not just to cover final expense, but to potentially reasonably maintain a quality of life, if for nothing else on a short-term basis, but quality of life. Can you speak to that for me?
Of course. Becoming an insurance agent really, it really opened my eyes to so many things. For example, I know we mentioned the return of premium policy. That is a great policy or plan for those who will use it wisely. Traditional term is something that's beneficial as well. Like she mentioned, if a person, is younger, really healthy, it's helpful to get those larger amounts for a very affordable price. There's benefits in traditional term. Return of premium is a step above that. It still has that traditional term aspect, so it's going to end in the time frame that you selected. So if you selected 30 years or 20 years, when those years are up, some companies will allow you to either get 50% back of your money. Some will allow you to get 75 or 100%. But you do get that money back. What I encourage my clients to do, you didn't need that money over those 20 years. If you're still alive, or if say you got that policy for a child and they were maybe 5 years old, in 20 years, they'll be 25. And say you had an $100,000 policy for that child and you get $35,000 back in 20 years. That $35,000 could be a great gift for that 25-year-old. That could be a down payment for a home. That can be a new car. That can be added. You can take that money and put it into an annuity, another investment vehicle. It's so many things you can do with return of premium. And when I realized that, it just, my mind blew away. And so you can actually live off of your life insurance depending on the type of policies you use. Now, there are different policies and they all serve their own purpose. So the universal life is another type of investment tool, and it does give you a higher rate of return. Most whole life policies will give you about 3.5% on your money that you're taking every month. So say your policy is 50%, they're going to invest that 3.5% on that money. Most universal life policies start at 4.75%. So that's a higher rate on your money that you're investing. So to answer your question, you can live off of life insurance now, but definitely whenever, you or that loved one passes away, that money is meant to help them to sustain the life that you've created together. So that home, that car, the lights and water, the food, just creating a sense of sustainability so that hurt isn't as impactful when that person leaves. But life insurance is definitely an investment tool. It surely is.
I love it. Thank you for sharing that. Miss Kenya, you mentioned about, in large cases, quality of life. If something were to happen, the child's got to go to college. They've got to do this. What are some things that should be considered when it comes to, having a policy to cover? I mean, something happens to me, at least the house is paid off. Kids can go to college. With your experience, what are some things that people should consider ensuring that can be covered if they can afford it in the event of an early death?
I mean, she kind of pretty much said it all. I mean, you just want to consider, especially, and more so if you have smaller children, I guess if you have a wife and kids, but if you have smaller children, like you have to look at what it's going to take if you're not here. I mean, you would want those children to have that same life, because most of the time when someone dies and they have a lot of children, they get spread out to different family members, and it's whatever they can do. So I think when you think about if you're thinking about the future, then it gives you the opportunity to make sure your kids are okay. And another thing, I don't know if I mentioned this or if we even got to that part, another thing that the policies can do, because let's be honest, old people are not leaving here as much as young people are. And so what I do also, I tell parents and grandparents with our policies, if you have an irresponsible child and you know you got some grandbabies, that if something happened to this child, those grandbabies going to fall on you. You have the option to carry your grandbabies as well as your child as a rider on a policy for yourself or for them. So I end up talking to a lot of grandparents, believe it or not, like, okay, this child ain't taking care of these kids now. And so, we're just being real about it. And so it allows you the option to get whatever term that you get. You can add them as a rider for little as $5, especially if they're under 18. And if something happens to you or their mother, which is going to be ultimately your responsibility, those children get the full amount of that policy. So it's another option as well.
I will add this though. I put this disclaimer: anytime someone wants to put a rider on the policy, just keep in mind they will be kicked off that policy at age 27. Not 27 in the day, but 27. And I share that story because I had a friend who did the same thing, and it's a great way to add on coverage, and it is affordable. Their daughter got into a really bad car accident. She just turned 27. Just turned 27. She was pregnant, and she got into a really bad car accident and died right then. And that's the only coverage that they had on her. And the insurance company did not cover that funeral because term riders end. That's what they are. They end at the end of a term. So just be mindful when you're adding riders. Or if that's you listening and you want to add a rider, by all means do that. Just be careful.
I love the practicality that you guys are sharing, especially for our community. I never even thought, Miss Kenya, about, potentially being a parent, grandparent with a child who is a little irresponsible. Life can possibly happen. I never even considered that. I want you to help us, okay? I am, hypothetically speaking, I'm a new parent. I just had a newborn. When would you recommend I get coverage for my child? At what age would you recommend that I get coverage for my child?
Go ahead.
You go, Miss Kenya. That's a great question for you.
Okay. Well, that's the whole purpose of the rider. So first of all, outside of, I think when I want to say Gerber, you can help me with that. Most companies won't let you insure a child under 2 years old. It's different laws with SIDS or different things like that. Now they have different policies you can put them on, but the rider at the same time would be a good thing for younger children until they got like 12 years old. Now that's just my recommendation. You can put whatever you want to them at whatever age, but who are they taking care of? How much insurance do they really need? And then at some point, you can only put so much on a child because they don't have an income or a person to take care of, and it looks suspicious if you go get some $500,000 policy on the child. They're like, are you gonna knock them off because they don't work? They're not a provider. So that's one of the ways that you can do that. But they have different things out there. Like I said, Gerber has policies, and they do have some. But if someone's having a baby, I would say you should already have your own policy and just add them as a rider, and then look into things as they get older to see what you would want them, to have, or what you would want to have for them.
Excellent. Thank you for sharing that. Miss Carlotta, you want to add to that?
Gerber's a great company. Sorry, my brain went away. But there are other carriers out there. Foresters Financial is one company that I write for. They are a really great company, and they have children whole life policies. Term is great, but there are policies out there that are available. Mutual of Omaha has a child policy as well. With Foresters Financial, they start at age 0, so you can get a policy on your child as soon as I'm going to get one. on my next child, as soon as I would have birth. But and they also come with a college scholarship. So there are other companies outside of Gerber that are really good and affordable. For example, I have a policy on my daughter. It's very minimal. It's $10,000, but I only pay $5 a month, and it's whole life, and it builds cash value, and it also comes with college scholarship. So just do your research whenever you're doing any type of looking for insurance, because there are different companies, and each company offers their own benefits.
Yeah, I like, and thank you guys for clarifying that. I set you up. I did it on purpose, to be honest. If you are watching City Church of Goldsboro, before you get out of the hospital and put that baby in a car seat and go home for the first time, you need to be on the phone with your agent and making sure that there's some coverage in place. If for nothing else, adding that child on as a riter, and to ensure that there's some coverage. Anything could happen. There's really no age where they're too young. If they exist, there should be some type of coverage on that child, on that person. When we think about our community, sadly, when it comes to life insurance, there are way too many people who are leaving this earth without it. The next option becomes GoFundMe, et cetera, et cetera. And sadly, even in our community, these things have become a bit of a joke. So we're seeing way too often where people transition finds them and they're not prepared. And now we have to pull on family, we have to pull on community, we have to pull on our churches for support to do things that we honestly could have prepared for. These, sadly, are the stories that often get put in rotation. But I am hoping through your experience in the industry that you have seen where being prepared and having policies in place has become a beautiful thing. I have one story that I could share. I'm not going to share because this ain't my moment, but it changed. It changed the way that I saw preparation. It changed the way that I saw having coverage. One of my things is I always tell the City Church, if you can afford it, I want you to have enough coverage that if and when life finds you or your spouse, you get to tell your job when you're coming back. Mm-hmm. When you have been loved right, I want to grieve well, and I don't want my grief to be interrupted by you calling me 10 days later because I need to come back to work. No, my boo loved me well enough. They deserve 6 months for me to sit around this house and eat ice cream and donuts and watch Montel Williams reruns. I'm going to give it my all. You understand? So what are some stories, a story you can share of how being prepared really impacted a person, a family, their future and or posterity?
I saw that question and I said, my Lord, there's so many different examples. I'll give...
That's a good thing.
There are several. I have several good and I have several not good. I'll give the not good first. I had one client, I met her maybe the first year I started doing insurance. She wanted to get some coverage on her mom. Her mom didn't want to. You do have to have consent to cover someone. You can't just get coverage on someone, although I'm sure there are agents that do that. But anywho, this maybe 3 months later, I called the mom, and the mom was saying, well, I'll think about it. I'll get back with you. 3 months later after that, I got a call from the daughter asking me, did mom ever get any insurance? And I said, no, mom didn't get any insurance. She said, well, mom passed away last night and we didn't have any insurance coverage on her. Mom might have been like 64. And like you said, Pastor, a few minutes ago, they were raising money to funeralize her. And this wasn't a family of color, but under insurance, it hits every family. It's not just the African-American community for sure. Absolutely. But that was one of my stories that kind of touched my heart because it was like, only if I had hit, the heartstrings a little bit harder, we could have gotten her covered. But that was in my rookie year. And so I try not to have that. I had a young lady, this is a positive one. I had the opportunity to sit down with a family. It was mom, so grandma, the daughter and her husband, and the mom's sister, and it was a beautiful night of just education. And we got to write up policies. And then I'm contracted with Lincoln Heritage, so we give all of our clients this. It's called a final wishes. My final wishes, and what you do with that is you get to document your final wishes with the company. We send it in, or you can do it electronically, and the company literally advocates for you. But even if you don't have Lincoln, I still encourage families to sit down and go over everything. You know, the funeral home that you may choose, the cemetery that you want to use, what you want to wear, you know, the pallbearers and flower girls. And if you have any legal documents, make sure that you're letting a loved one know where they are located. That's very important. And if you don't have legal documents, especially if you have any assets like a home, a car, any property, you want to make sure that you're at least having somebody in mind, not just in mind, but on paper, who will transition and get that once something happens. So anywho, that family was able to do all that, and then the person, one of the loved ones, passed away. But because we had those conversations, it wasn't hard for them. It wasn't them randomly pulling up information and having to find it in home. And so it was really a beautiful moment. And I enjoyed those moments because it makes me feel like I'm helping a family, because I know what grief feels like. It was hard as an agent to bury my own mama. Your brain just goes away. You're foggy. You can't really feel. You're numb. And all I could remember that day was my mama said, "Don't put any underwear on me," or "no stockings." And that's all I could think about. But luckily we wrote it down. And I have a relative that's a funeral director, so he was able to kind of help pull some of the information out. But nonetheless, making sure that you have that information documented is important. Yeah.
That was excellent. Thank you for sharing that. If it's all right with you, I want to take a minute and I want to plug in.
Okay.
I think, and I'm saying this respectfully, I think it is selfish on a person who allows life to happen unprepared and leave families to fight over and fuss over who gets what, et cetera, et cetera. In many cases, we know the dynamic of every family. And oftentimes, because I am looking to avoid disappointing someone, I don't have these preparatory conversations and I leave them to be had when I'm already gone. And it is these types of moments and things that pull families apart. Families are devastated, fighting over cars, fighting over vases, fighting over who gets to keep mama's Bible. When if we go ahead and have these conversations, we can grieve well. Everybody knows who's getting what, and we can still live in peace and love on one another as a family, even post life in this situation. So I want to encourage every seasoned saint to sit down with your family, have these conversations now. Look at who has their lips poked out and tell them to get themselves together. I'm making this decision, and there's nothing you can do about it. So when it's time to grieve, we can actually grieve without fighting brothers and sisters. That's just my 2 cents. I wanted to go ahead and get that out of there. And so, yes, Miss Kenya, what story?
Okay.
Did you want to add something, Miss Carlotta? Did you want to add something to that?
I was just going to say amen.
Yeah, thank you for that. Miss Kenya, I want to give you space to share your stories, whatever you have. How can we win? Encourage us. We want to win when life finds us.
So I'll like to answer the question you initially asked as far as telling a story. I'll tell 2 quick ones. So my cousin's 40 years old. Her son was murdered about 5 years ago. And luckily, if there's such thing as luckily, she had 3 different policies on her son. And to be honest with you, she called me screaming. All I heard was they shot him, he's dead, rushed to the hospital. I walked through the whole process with her. But I'll be honest with you, to watch my cousin or any young woman that has lost a son sit there and literally just be able to say, okay, I want this, I want that, I want that. And money was not an option for anything. It made her process of grieving so much more peaceful. And I like the moment of being in that. Now, she ended up buying him a really expensive casket. It was like a Buccaneers, which is fine, which is great. But I also tell my people as well, like my husband and my daughter don't want to do it, but I ask to be cremated because I'm like, give my grandbabies that money. I don't need that, but I understand that certain people do things for emotional and sentimental reasons. My other story is I lost my stepfather about 10 years ago, and he was blessed to have a $500,000 policy. And the great thing about that was my mom was a zombie. She literally, like, I'm not imagining, like, making this up. She could not talk for 3 days. And we were having to make arrangements. So it was also a great thing to where I didn't have to deal with nobody else. I could literally just sit there with her and just literally just let her nod. But again, and then because she had that, she was able to bury him. The house she lives in now, it's paid for. She bought herself a new Lexus because she said he wanted her to have it. But it was just awesome to see that we had lost our dad. But we knew that mom was never going to have to worry about a place to live, to pay rent again. Actually, we're in the process now of her signing it over to the 4 of us that are left. But just knowing that his death, unfortunately, has left her a house that is now will be left to us. So that's always good.
That's man, thank you for sharing that. That is what I'm talking about. Like generational transfer and more than just final expense. We are going to win. If even maybe you're here and you don't have children, who has possibly impacted your life enough? Who have you kind of called a godchild or anything where a potential policy could pay off that house? And instead of somebody coming to take it and make good off of what you have invested so dearly in, it could potentially be paid off and given to it as a gift to somebody that you love to set them up to go further, farther, faster. And even as they're doing that, your name will constantly be repeated over and over. I am not here because of how hard I work. I am not here because of how much money I earn. I am in part here because this person loved me enough to help me go further, farther, and faster and leave me with something of value that I would need anyway. So these are these generational opportunities that could change everything. So what if my family, we've never had much, we don't come from much, we don't know much, let that end with you. It stops with me. When I am done, my children, my grandchildren, again, are going to go further, farther, faster because I cared enough to think of them, to plan for them, to prepare for them. And even being years gone, they're going to continue to speak well of me because of the gift that I left. I appreciate that so much. We have vaguely kind of touched on kind of end of life versus legacy policies. And in many cases, that may just be contingent upon the amount that I want to have as it relates to a policy. So what are your recommendations, thoughts, ideas relative to end of life versus legacy policies? Yeah, and when I say legacy policy, I'm talking about something that could be substantial enough that it goes beyond putting someone in the grave, but leaving a little something left to pay off bills, to grieve for a few months, to travel, and then to continue to live well.
I educate my clients on you can do if you are able financially to invest in a legacy type policy. And legacy policies are ones that will allow you to accumulate a larger amount. And there are different policies that allow you to do that. As I mentioned earlier, and Miss Kenya, the return of premium, that can be considered like a legacy policy depending on how you utilize that opportunity. Universal life policies will yield the higher rate of return. So your cash value or the savings account that we call it, you'll see your money saving up a lot faster in that larger quantity than you would in a whole life policy. Whole life policies are safer. I say that they're safer in that you're not taking that risk with the investment through the insurance company as much. And you mentioned the stock market. A lot of people don't know this, but that's how you get your cash value. These insurance companies are investing your monthly premium or annual, however you pay, but they're investing it in the stock market. So NASDAQ and S&P 500, you'll see that on the news, but life insurance companies invest it. So that's how you get your cash value, honestly. So the legacy policies, the more aggressive the life insurance policy, the more money you're going to get, but it's a little bit more risky. Whole life is a little bit safer, but because it is a little bit more safer, you'll also see the premiums are a lot higher than your regular term policy, your return of premium, and your universal. So I encourage my clients to, if we're on the budget, cool, because I'm on one too. I'm trying to buy a house. If your family can afford a certain amount per month or even annually, like I mentioned, if you get a tax return and you don't need that money, then let's use that as a life insurance platform and let's diversify it. So let's get a term. Like she mentioned, you can go up to like 5 million with some companies. If you can afford it, go ahead. But using a term or universal to invest as a legacy policy, but then having a whole life policy to where, it's not as risky. It's not going to ever end. And there are some companies that will allow you to pay your whole life policy off within 20 years. That's called a 20-year pay. I encourage my clients to do that too, because when you're 70, you don't want to keep paying $100 life insurance policy. So there are different options. And I hope I answered your question. I encourage both if you can. And it depends on the age of the person as well. I'm not going to encourage a 65 or 70-year-old to invest in a $5 million policy. First of all, it's going to be hard because most insurance companies stop covering term at 60. But they may not need all that. So end of life or final expense may be better for them. It'll be most affordable. And I'm gonna quit talking, but that's my 2 cents on it.
Absolutely, thank you for that, Miss Kenya.
My answer would be do what you can afford to do. And I know we've talked about we want everybody to have those policies, but the reality is some people's health issues, it doesn't matter what they want. Their health issues are not going to allow them to have that. So if you find yourself healthy and you have the funds to do it, then you, of course, would want to start with the policy that's going to, of course, give you, the most return. Unfortunately, a lot of our people, because we eat bad, we develop things and me personally, I could be wrong. I feel like a lot of things that they discriminate against are things that we have personally, but that's just my opinion. And so those things, unfortunately, like I said, no matter how much money you got, unless you have the money to just get a whole life policy, knowing that because you have a 2-year term, sometimes they'll let you as long as you live within that. If you have the money to invest in it, of course, invest in an insurance policy over a bank. But the reality for a lot of people, like I said, is because of whatever health issue you have, you don't really get to go but so far because of that reason. Yeah. And obesity is definitely one that they keep kind of, I don't know what they're doing with it.
And so before thank you for mentioning that, correct me if I'm wrong, because of things like obesity and even some of the diseases, illnesses that are common in the communities of our darker skinned brothers and sisters, we're starting to see those become more prevalent in our children. So it's becoming more difficult even for children to get more quality policies because of pre-existing conditions that are starting to show up earlier. So to me, that would mean it becomes more advantageous for us to get these policies as early as possible before some of these conditions begin to show up. Am I safe on that?
And can I say I can say one more thing, because me and my husband actually had this situation, and neither one of us are considered overweight, but we were going through a policy change, and I think he ate some bacon that morning, and it raised his level, whatever it was. But also they gave us an opportunity, of course, to do it over. But I said all that to say some companies will allow you like a period to lose weight, and then they'll rewrite, based on if you're losing weight, because just like if you gain weight, underwriters will actually can deny you in that next term. So the same thing works if you are unhealthy, but you can lose a little bit of weight, you can get your blood pressure down, you can get those things down. Those same underwriting companies will now reward you because you have gotten healthier. So even if you start out with something, you can always increase if you get your health together, so it doesn't have to be a no, completely or no all the time.
Absolutely. You want to add to that, Ms. Carlotta?
I did. I agree with everything she said. So maintaining your health is definitely important. There are some companies that will rescind a policy. I didn't even know there was a thing. But say you do get coverage and 6 months down the line, maybe you have a heart attack. Some companies have the right to rescind your policy. That means that they'll literally they'll take back their approval for your coverage. That's heartbreaking when that happens because we can't predict the future. But there are some companies that are that strict. There are some who do more extensive, like they'll do exams. They'll want to do your lipids, like she just said. They'll check your driving record. I had a client that got declined because she had a DWI. So it just depends on the company and the underwriting. That's very important. One last thing, when it comes to end of life, so hospice comes to mind, or long-term care facilities. I am a Medicare agent. These are conversations that I do have with my seasoned saints or persons with disabilities. There are policies out there that will help to cover the cost or kind of kick in when you need to go to these facilities. So it's important to talk to your agent, especially if they are qualified to help you with Medicare or health insurance, to do those long-term care policies as well.
I forgot to also just add really quickly. There is additional medical coverages too that you can purchase through your auto policy. In the event something happened to you in your car, you get that on top of whatever you had, and it's not that expensive through your auto policy. So.
Absolutely. Thank you for sharing that. So there is, I want to say it's 35, 40, maybe 30. There's like an age right there, that sweet range where policies are generally cheaper if you get it before that age. Is there like an age window where your policy can be more affordable if you're healthy and get it under a certain window? Or did I just make that up? I might have just made that up.
No, you didn't make it up. I'm not going to say that. It depends on the companies, but you ideally want to strive to get your coverage before age 40, because after that, it will increase significantly. The craziest statistics out there is men are much higher in insurance coverage than women. Statistically, men may not live as long as the women. So they're trying to get as much investing as they can. Which is where you get the quote. You get the quote from age and gender. So if you're a 60-year young female versus a 60-year young man, that man is going to definitely be higher in coverage. Or if you have someone on disability that's 18 versus a 60-year-old, their policy actually might be the same amount because they have that chronic condition versus that person being 60 years old. So it just varies. But you're right, there is kind of a sweet spot. You just don't want to go above a certain age. And definitely after the age of 85, most carriers will not cover you. So when that happens, I will encourage my clients to go to a funeral home, and they have policies specifically for coverage for, funeral expenses.
Yeah. And I said, I think I made that up, and I lied. I know I didn't make that up. That was something that my insurance agent worked with my wife and I on, and he made sure that we tapped into a bit of life policies before that sweet age. And when you talk about the difference in rates between men and women, we saw that between my wife and I. I was quite offended. While I was also most appreciative because her rate was much cheaper than mine. I'm like, hold up, bucko, what is going on here?
Mm-hmm.
But I am most appreciative. I am thankful for the time that both of you have shared with us and have given of your wisdom and your expertise. I want you, we have a couple other brothers and sisters who are part of our local assembly who are also agents, and they could not be a part of this conversation tonight, but I already gave them permission to get in these comments and to drop their information in case any of their brothers, sisters are looking and want to have a conversation. They are additional options. But with that being said, you two are the ones who did the work tonight. So I want to ensure that if someone is looking for continued conversation, where could they find you? What is your specialty? What would they need to consider in engaging with you? Just equip our audience with whatever they would need to get in contact with you and to possibly do some business together.
So our home office with the Williams Group is in Raleigh, North Carolina. But if you're not in the area, you can find me on my social media platforms, Insurance with Carlotta. And I'll make sure that you guys get that link so that you can follow me on Facebook and Instagram. You're welcome to reach out to me anytime. I think that would be an easier way through social media sometimes. And then, of course, on those pages, I'll have all of my other links to websites and things.
Exactly. Thank you for that. And while they're even sharing, all their information is being dropped in the comments right now. So if you're looking for that information, you don't have to go too far. Go in the comments right now, and everything that you're going to be able to need to get in contact with these lovely ladies is going to be right there. Miss Kenya, we'll let you finish.
I'm not really big on social media when it comes to advertising. My email is Kenya, my first name, Kenya P, middle initial Holly @gmail.com. And then my phone number is area code 813-419-2909. That is a Florida number. So 813-419-2909.
I want to say thank you again, ladies, for your time. Thank you for sharing your expertise so generously with us. We are better because of you. We pray God's choicest blessings over you, over your family, over all of your future business endeavors as you continue to help all people in our community, but maybe more specifically as you help so many of our brothers and sisters on tonight. Miss Carlotta, we speak the blessing of God over you and your family, the McCluskeys.
Thank you.
Again, we pray God's blessings over you. Thank you. You came with us over in, when we were at Dillard.
I know.
I think that was on a Sunday morning. So we didn't exactly have an opportunity to converse and to kind of talk as we're doing right now. But thank you for being willing to make yourself available to come back. And hopefully next year we're going to be able to run it back again.
Of
as
course.
We're going to keep having these conversations and preparing our people, our community, to live their absolute best life in Jesus' name. Again, ladies and gentlemen, if you want to contact Miss Carlotta or Miss Kenya, their information is in the comments. These conversations are going to remain on our YouTube as well as our Facebook, so you can run them back and you can shoot them to some of your cousins, nieces, and nephews. We want to be delivered for the best of our ability from this GoFundMe spirit. We want to prepare ourselves for the inevitable. Life is going to find all of us. And if and when it does, let's at least make our pain pay. Again, thank you so much, ladies. Thank you, City Church. We love you. Until the time we meet again, the blessing of God be upon you. In Jesus' name, take care.
Thank you, guys. Have a blessed one.
Bye-bye.
Absolutely.